Hi, welcome to a quick update on yesterday's market alert, which was obviously for today. The overnight market, we've seen the futures tumble on heavy volume as China Golden Week begins. This means the market's closed for the next 5 days in observation of the Chinese New Year. And the futures have actually gapped lower. As I said yesterday, we've got a big correction coming, and now this is very useful because we can actually measure how much upside momentum this market's actually got. So let me just show you what's happened on the overnight. We've got the market closing on Friday, it gapped down 47 points. It's also put in a low on this bar of 20,002. So as I said before in the market alert, the 20,000 is a very important level. It's got to stay above this, because if it closes below, then we're going to see the market move lower. So we came within 2 points of the 20,000. But the good news is we've now got a situation where we can actually see how much momentum is in this market. I'm going to do that by using the fib retracement tool. I'm going to come off Friday's high down to the overnight low. This is the current one, as long as this one stays in place, of course. And I'm drawing in the 62 and 76% retracement here. Now, if the market can't close back above these two lines, then we're going to have confirmation that the weakness that we're seeing in the market, or starting to develop in the market, along with the lows in the implied volatility, we're going to see it move to the downside. So the easiest way to do that is to measure from the high down to the low, which is the current low. I mean, it could turn around and go lower today, and then we'll have to redraw this. But now, if the market stays as it is and starts to move back to the upside today, then watch these two levels. Failure to close above these two levels will confirm that the market is becoming weaker, and we're going to see the start of the move to the downside. And also, while I'm on it as well, you want to have a look at this as well. The one chart that America's corporate elite don't want you to see. We've already spoken about JP Morgan and all of the other banks selling hundreds of millions of dollars of their own stock. And this has been obviously recorded. And now Barron's details what's called the insider transaction ratio. And you can see that there's a huge amount of corporate selling across a broad-based market going on as well. This shows 59. I've done a bit of research. I've actually seen this higher at 75, so it has got a bit if it wants to go. But you can see from February of last year all the way through to here that it's never really gone above 40. So combined with the reporting of all of the banks selling hundreds of millions of dollars worth of their own stock, you can see that within the last 12 months we're now breaking out, and there's a lot more selling going on as well. Combine that with the lows in the implied volatility, the 20,000 psychological level, and then, as I say, if you just use this in the daily chart to actually measure back to see where the market's momentum is going to fail, and then you'll have confirmation that we're going to have a move to the downside. Things are starting to unravel for Trump as well, especially with the whatever he's done over the weekend. I've not really paid much attention to it, but banning Muslims from entering the country, or whatever it is, some lunacy that he's up to now. It's just going to get worse, and as we go forward, the wheels are they're definitely going to come off the euphoria that we've seen post-inauguration. Without a doubt, it's just going to get worse, and you're going to see the market moving to the downside. Everything else is lined up for it. If it doesn't, it will be a miracle, and it will be central bank intervention that will have stopped it. Nothing more simple as that, because everything else fundamentally and also technically lines up for that to actually happen. The only thing that you can't legislate for is Yellen coming in and holding the market on the highs. Also, something else, for those of you that have been trading for an awful long time, remember markets tend to fill gaps as well. We've got a gap, and market doesn't like gaps, tends to fill them as well, so keep an eye on that as well. So that's a quick update. See you in the next one. Thanks for watching.